It's hard to miss when a stock starts making waves online, and Fingermotion, ticker FNGR, has definitely been, well, one of those. It feels like it's been on a kind of roller coaster that a lot of investors have been watching. Pretty fascinating.
That's certainly the case. FNGR has become a really interesting focal point, especially when you look at the intense speculation surrounding its price movements.
Absolutely. And that's exactly what we're digging into today. We're going to try and unpack the story behind, the ups and downs, specifically looking at these allegations of naked short selling and all the talk of a dramatic short squeeze that has followed Fingermotion.
Yeah, the goal is really to make sense of these sometimes complex financial ideas for you without, hopefully, making your head spin.
Right. We've looked through a whole lot of information to try and get to the heart of what's been going on.
So our mission, if you like, is to understand the history here. The short squeeze speculation and the specific claims about naked short selling related to Fingermotion. We've looked at, well, everything from news reports to social media chatter, company statements, trying to bring you the key insights.
Okay, so let's get into it. The idea of a short squeeze around Fingermotion, it really seemed to pick up steam back in October of 2022. What was the spark then?
Well, what's interesting is how FNGR first kind of popped up on the radar for individual investors as a potential short squeeze play.
How did that happen?
It was largely due to indicators suggesting, a high number of short positions. And even then, early whispers about the possibility of naked short selling were starting.
And this wasn't happening in a vacuum, was it? I remember reading that Zero Hedge actually mentioned FNGR alongside those meme stocks like AMC and GameStop.
Exactly, yeah. There was a clear parallel being drawn to those really high-profile squeeze events. It showed how much, online communities were influencing trading.
Which brings us to places like Reddit and Twitter. It sounds like they were pretty central in getting individual investors, organized around FNGR.
Precisely. These platforms basically acted as like digital town squares, places where investors could share research, talk strategy, and coordinate their trading. This collective action is a really important piece of the FNGR story.
And then, adding another layer, Fingermotion's own board of directors put out a statement. What did they say?
Right, this is critical. In October 2022, the board stated they suspected the company might be a target of market manipulation. Specifically, they mentioned naked short selling of what they called fictitious shares.
Fictitious shares. Wow.
This came after they looked at their trading data going back to the start of September that year and apparently noticed some unusual patterns.
That's significant. So the company itself was raising the alarm about potential funny business. And as you said, this period also saw the stock price climb, probably driven by this retail interest, right?
That's right. The increased buying from individual investors who believed in that short squeeze potential definitely helped push the stock price up at that time.
Okay, let's jump forward a bit to the middle of 2023, June and July. This is when we saw another really dramatic surge in the price.
Oh, indeed. Between June 13th and June 26, 2023, the stock price shot up, remarkably, over 200%.
Over 200%.
Yeah, and then on June 26th alone, it jumped another 20%.
And what was interesting about that huge jump was it didn't seem tied to any big news or announcements from the company itself.
Exactly. That lack of official news led a lot of people to speculate that this rally was pretty much entirely fueled by retail investors trying to kick off another short squeeze.
And this is when social media lit up again, right? I remember seeing mentions of users like @HamShortKiller on Twitter. What were they saying?
@HamShortKiller and others were making some, pretty big claims, alleging that there were close to 150 million shares of FNGR that had been sold short without being properly borrowed. Naked shorting.
150 million, if that were true.
Right, if true, a rising stock price could put enormous pressure on whoever held those short positions.
Which is sort of what happened. The price kept climbing, and the narrative was all about high short volume and just not enough shares available to easily trade.
Correct. That feeling of scarcity, plus the belief that a huge number of shares were shorted, created this environment that was just, perfect for short squeeze speculation.
And we even have some data points from around then, don't we? I think I saw something from franklinez.com in July 2023.
Yes, according to their info at that point, the data suggested a, quote, high probability of a short squeeze. They even put an estimated average trigger price on it, around $5.28.
$5.28.
And they pointed out the huge run-up over the previous month, a massive 329% and 114% gain just since the start of that year.
Those are just astronomical gains. But as we often see with these super volatile stocks, the party doesn't usually last forever.
That's a really crucial point. Even with all that excitement, the stock actually dropped by 7% in a single day around then. It just highlights how incredibly quickly things can swing the other way.
And it sounds like retail investors were seeing echoes of October 2022, maybe hoping this time the gains could be even bigger.
There was definitely that sense of déjà vu, yeah. But maybe with even more anticipation this time around. The first run had put FNGR on more maps, leading some to think a second squeeze could pack an even bigger punch.
Now, moving into 2024 and even 2025, it seems like the speculation hasn't totally died down. FNGR is still being watched closely.
That's right. Even without those crazy price swings of mid-2023, FNGR has stayed on the watch list for many individual investors. They're still tracking short interest, still looking for signs of naked shorting.
And we saw some new claims popping up on X, formerly Twitter, in 2025. Tell me about that post from @ham59591 shorts in March.
Okay, so that post mentioned a technical chart pattern called a death cross forming on FNGR's chart. Now, for anyone unfamiliar, that's when a shorter-term price average crosses below a longer-term one.
Usually seen as bearish, right?
Often, yes. But this user interpreted it differently. They suggested it was actually bullish for people holding the stock long and a warning for the shorts. They even brought up the HKD squeeze as a kind of a comparison.
Interesting spin. And then there was another post in April from @Naked Shorts with some really eye-popping numbers.
Yeah, on April 30, 2025, @Naked Shorts threw out some very specific figures. 255 million naked shorted shares, they claimed, plus 2.5 million real shorts and another 3.5 million tied to options.
So 155 million naked shorts.
On top of that, they claimed there were 0 shares available to borrow and a whole lot of call option activity.
And that wasn't all, was it? They mentioned some outside factors, too.
That's right. The post also hinted at things like Trump going after crooks, maybe suggesting regulatory action, and the idea the company might issue a special dividend, both things that could potentially squeeze shorts.
But it's really, really important we stress that these claims are seeing particularly these huge numbers on social media.
Absolutely. It is crucial for everyone listening to understand that these figures and claims lack independent verification. They can definitely fuel online chatter, but they shouldn't be treated as confirmed facts without solid proof.
Okay, so we talk a lot about short squeezes and these claims of naked short selling, but maybe for some listeners, can we just break down exactly what naked short selling actually is?
Sure. Basically, naked short selling is when someone sells shares of a stock short without first borrowing those shares or even confirming they can be borrowed.
And that can cause problems down the line.
Yes, it can lead to failures to deliver or FTDs because the seller simply doesn't have the shares to hand over to the buyer when the trade is supposed to settle.
And just to be clear, this is illegal in the U.S.
That's correct. It violates SEC rules. Regulation SHO, which came in back in 2005, is the key one here. It mandates that brokers have reasonable grounds to believe the shares being shorted are actually available to borrow.
So how does this illegal practice, naked shorting, potentially tie into a short squeeze and maybe even make it worse?
Well, it's interesting because naked shorting can potentially magnify a squeeze. If more shares are sold short than actually exist or are available, it artificially inflates the total number of shares that short sellers eventually need to buy back.
Oh, I see.
So if there's a sudden surge in buying demand, all those short sellers, including the naked ones, scramble to buy back shares at the same time. It just intensifies the buying pressure and can drive the price up even faster and higher, like more people trying to cram through the same tiny exit door.
Sounds like a recipe for chaos. And I know there are different views on naked shorting itself. It's not universally condemned in all contexts.
That's true. While critics strongly argue it manipulates prices down and harms companies, some academic studies suggest it might, in some cases, improve market liquidity or help prices reflect information more efficiently. But the legality and the potential for abuse are definitely the dominant concerns.
Okay, let's bring it back specifically to Fingermotion then. We mentioned the board's statement from 2022. What exactly did they say that hinted at naked short selling?
The Fingermotion board specifically said their review of trading data led them to suspect the company might have been targeted by a scheme involving the naked short selling of, and this was their term, fictitious shares.
Fictitious shares. That wording is pretty strong.
It is. It implies shares were being sold that the company hadn't even issued.
And we've seen these repeated claims online, like from @HamShortKiller in 2023, talking about millions of counterfeit shares.
Exactly. That narrative, the idea of a massive overhang of these unborrowed or naked shorted shares, became a constant theme in the online FNGR discussions. Those large numbers fuel the squeeze anticipation.
And it wasn't just one or two accounts pushing this. I saw at Kashanacy2 also weighed in around July 2023 with similar stuff.
Yes, at Kashanacy2 posted about an estimated 160 million shorted shares, and they also believe most of those were, quote, counterfeit or unborrowed. Their posts echo that same feeling that this situation had to lead to a big run-up in price eventually.
And the claims kept coming into 2025. At Kashanacy2 was back on X in January claiming something about new SEC data.
That's right. On January 16, 2025, they claimed that new SEC data supposedly showed daily instances of naked short selling in FNGR. Now, if that were independently verified, it would certainly be significant.
And then in April 2025, the same users suggested there could be serious financial pain for some firms if a squeeze actually happened.
They speculated that if a major squeeze occurred, the prime brokers and other firms holding these allegedly counterfeit shares could face huge losses, potentially even lawsuits from the original short sellers, ironically.
And we also can't ignore that SEC lawsuit mentioned in 2023 involving Sabi and Mintz, which reportedly included FNGR.
Yeah, that's an important piece here. A post by @WilliamFarron1 on June 13, 2023, referenced an SEC action against Sabi and Mintz. The allegation was illegal naked short selling, placing short orders without locates and failing to deliver in FNGR, but also other stocks like GTII and MMTLP.
So that lawsuit definitely fed the narrative for investors who felt FNGR was being unfairly targeted.
Absolutely. It seemed to provide some initial validation for their concerns about manipulation.
But despite all these claims, the company statement, the lawsuit reference, it still sounds like concrete, independent proof of widespread naked shorting in FNGR, especially at those massive numbers claimed online, is hard to pin down.
That really is a key takeaway. There's a lot of smoke, a lot of suspicion, but definitively proving, say, 150 or 255 million naked shorted shares based on public data is extremely difficult, if not impossible.
And it's interesting that even broader studies looking at market-wide failures to deliver haven't always found that they directly caused massive price drops or company failures.
Exactly. There was that 2014 study often cited which looked at the 2008 crisis. It didn't find strong evidence that FTDs, which can indicate naked shorting, were the primary cause of price distortions or firm failures back then. So the impact might be complex.
Of course, that doesn't mean regulators are ignoring it. The SEC has taken steps against naked short selling over the years.
Oh, absolutely. They banned abusive naked short selling back in 2008. And we've seen enforcement actions, like a case in 2021 against a broker-dealer for improperly marking short sales, which can be related.
Yet you still hear about potential loopholes, right? Things like zero-plus agreements or payment for order flow might allow some forms to persist.
That's a valid criticism raised by some. They argue certain market plumbing, like specific locate rules or how order flow is handled, might unintentionally leave gaps that could be exploited, even with regulation SHO in place.
So circling back to those huge numbers, 150 million, 255 million naked shorts in FNGR, it's vital for listeners to grasp these are unconfirmed social media claims.
Precisely. While data from places like Fintel.io does show significant short interest in FNGR at times, it doesn't independently verify those extreme levels of naked shorting. Those numbers could easily be exaggerations or misunderstandings.
So boiling it down, what have been the main things really driving this whole Fingermotion saga, and what are the big risks investors really need to keep in mind?
Well, a huge driver, connecting to the bigger picture, is definitely the coordination of individual investors via platforms like Twitter and Reddit. We saw it with GameStop, AMC, and FNGR seems to follow that pattern.
Right, the power of the crowd.
Exactly. These online communities can seriously move stock prices, especially for companies with certain characteristics. What's really interesting is how these platforms can sometimes become echo chambers, where unverified claims spread like wildfire and become accepted facts, leading to action based on maybe shaky info. It's a real shift in market dynamics.
And for FNGR, one of those key characteristics seems to be its low float combined with significant short interest. How do those make it more prone to a squeeze?
Okay, think of the float as the shares actually available for trading. FNGR has a relatively small float, like a small boat. Combine that with high short interest. Lots of people betting against it. And that means even a small wave of buying pressure can swamp the available supply.
Makes sense.
This forces short sellers into a scramble to buy back shares to close their positions, competing against each other and driving the price up fast. That's your short squeeze. And if you add alleged naked shorts on top, phantom shares needing to be covered, it potentially pours gasoline on the fire.
And as we've seen vividly with FNGR, these super fast gains can evaporate just as quickly. The volatility is a massive risk here.
Absolutely massive. Those price swings have been extreme. That 7% drop in a day we mentioned is just one example. Investors have to understand, yes, there's the lure of quick, big gains with stocks like this, but the danger of equally big, rapid losses is just as real, if not more so. It's easy to get swept up, but these stories are cautionary tales.
And finally, these persistent allegations about naked short selling, even if the scale isn't proven, they have shown a light on broader questions about market structure and regulation, haven't they?
They really have. This whole situation brings up important discussions about market transparency, about how effective the current rules are at stopping illegal activity. The ongoing scrutiny, the SEC actions we mentioned, it all highlights the challenge of ensuring fair and orderly markets.
So, to kind of wrap up our deep dive on Fingermotion, what we've seen is this history of intense short squeeze speculation, really driven by online retail investors. And it's been constantly intertwined with these numerous allegations of widespread naked short selling. There were some huge price rallies, particularly mid-2023.
And while the company itself, and certainly many investors, clearly believe naked shorting has been a major problem for FNGR, independent verification of those really extreme claims is still lacking. What's undeniable is that FNGR has been, and likely remains, a highly volatile stock.
Exactly, which just underscores how vital it is to approach information you find online, especially on social media, about money matters, with a really critical eye. Don't just take unverified claims as gospel, particularly in the finance world where things can get very complex very quickly.
And maybe this leaves us with a final thought for you, the listener. When you see this level of intense speculation, this regulatory focus around stocks like FNGR, what does it really tell us about the growing power of collective online action in today's stock market? And maybe what are the potential long-term ripple effects for market stability, for regulation, as this line between individual investing and broader market forces keeps getting blurrier? Something to consider.